Hello, really quick study. Let me clean this up. Alright, so this is the 6 hour we have here, and right here is where these lows are, is exactly where I had expected to for price to reverse off of the first quarter of a weekly PDArray. And this is the quarter here. And just look down right here, you can see it right here. Now this is the 15-minute here, the 2 hour over here. You can see it over here as well. You can see price strikes it, bang, and launches up. So we can come over here to the 15, and we can see how, you can see how the price movement occurred right here. We have a low, a high, higher low, then we have this here, high, we have a low, high, the lower low, it explodes up. The timing is important. So we can see here where when it initially came to strike, this is during London. It makes the first strike during London. This candle opened at 4. It's a 15-minute candle. 4:15. This one opened. We see it's making a second leg over here. So we have this giant W, and it was making second legs. It's something to pay attention to when you get these strikes. If it's going to move off of something, sometimes or more often than not, it will make either a tight, ugly W if it's going long, or or it will make an extended one. So we have right here, we have at 7 a.m. Remember, this opened at 7, ran up to 15-minute. So now I'm going to put this cursor right here, and you can look over to the right. You see the crosshairs? All right, I'm going to zoom over there now. Keep looking at the right. Came here, right? All right, so that's 7:15. Now we know that the macro finished at 7:10. So look at 15. Okay, now we know that when I go down to 15 second, I break up the entire macro into quarters, and then we know that I also extended it from the 7:10 to 30, and then 30 to 50, and 50. So I basically created additional macro times or whatever, the main ones being what micro is taught, which is 50 to 10. So look at how smooth this is. Okay, if this is 15, okay, this is 15, this candle opened at 15, we know that the last 5 minutes was what? Accumulation. Look at it, it's tight, it's accumulating. Next is what? After accumulation is what? Manipulation. It started to open up, came, swept lows, ran into this here. This here has been a validated bullish order block. Once the high here got taken, this is a valid one. We have these candles here. It does go above that, and then all of this is together in order block being created inside these, with these inside of it. All of these down close is another order block. It's not validated till it gets up here. But anyway, this drop down is happening during manipulation. Do you see that? See 720? So 7:10 to 15 was accumulation. 15 to 20 was manipulation. And then we see the rise and distribution. And it distributes off of this area here. So we see over here we have 1, 2 strikes, and it comes down again. I noticed that when we have these W's forming, and then they stop short of making, if the like this should be like down, up, then go, because this is the W. 1, 2, 3, and this went. No, it actually came down and took out those lows. Another level of stops, going deeper, and it did it in here. Remember, we have internal range liquidity, external range liquidity. We have that. So the other thing I want you to focus on is here 30. See that? 30, 330. So the 30 is again another it's not necessarily a macro, but it's a time when price likes to move. So 30 opened up in here, and 30 ran down into the imbalance. So we have runs that happen on stops that are external range liquidity, and then we have things that open and run into internal range liquidity, into this here, internal here, ran into this here, and it's at this higher time frame PDArrays quarter, which was expected, and then it created this move here, and then at 7 o'clock, which now we know this is New York open. So New York open, you see price start to run, and then we see that it algorithmically on the 15-second time frame. If you want, we can actually go into it and drop the fib. We have accumulation, manipulation, distribution, and I believe we have continuation in the X. Let's get this here. Let's see. All right, let's take a look at it here. Go into the 15-second. Oops. I'm gonna bore you with me trying to find it. All right, so 7:10 right there. Okay, so this here, where we will put the fib time zone. This is a modified fib time zone. We drop it in 7:10. That's when we open. We go to 14:45. Right there. So you can see here. We can open this up. Okay, so we can see that this is, consolidation. When we see that S pattern type thing, that's clearly, consolidation. Now we have manipulation. Takes the high out. Oh no, is it gonna drop? Oh wow, it's dropped. Go for the run. Nope. Turns around. And so this is manipulation. It drops down, and we can see how when we have equal lows, see these lows all here, runs the high here, runs the low of the manipulation. So this here, this is the low, this is the high and low manipulation. That's taking the high out and then dropped down, took the low out, and it ran into a fair value gap. Anytime you see lows and then a fair value gap, those are strong points of interest and chances of prices to drop down into the fair value gap and then launch off, and that's exactly what it did. So it dropped down into here, striking here, and this is the distribution period, and it distributes. So you can see open, accumulation, manipulation, distribution, then X is continuation. Continue going higher. All right, so that's it. Just a lesson on how to spot those things. Entry could have been so we have all of this here. Entry would have been either as soon as it came down, you could have got in on the red candle. But if you're trying to do market structure shifts, then that would have been an entry right here. Yeah, let's just mark it up. So we have a we have a low, a high. It's really tight and ugly, but this is a valid swing low. See that? This is a valid swing high. It's very tight. Drop down, and now this is the distribution period, and lows were just swept. And the fair value, so you would have the mindset that although this is ugly, this should play out. Again, yeah, if you wanted to wait for the market structure shift, the technical one, this here is the breaker, low, high, lower, low. It's very ugly and stuff, but this would be the breaker. Like on the lower time frame, this would be more structurally, like yeah, this is that. But anyway, that would be first close is this one, boom. And on a lower time frame, you would have seen a fair value gap in here that got pulled into. As soon as this closed, it gapped up a bit and dropped down, and it hit here. You know, as soon as it hit the top of this breaker, could have been an entry. And that would have been right there. I'm focusing here. Either you could have just got right in, or could have did that, and it would have been below this low. And it says 4. And there goes 12. So that's 1 to 3. But obviously, the analysis for this whole thing was an expectation of price to strike the 25 and go and take the high out. So the high hasn't been taken out as of yet. So if this would be, I would have brought this to break even by the time it went all the way up there. Let's see if we got taken out. Nope, still running. 15 seconds. So, but today's Monday, so something to look into, a little bit to think about. But yeah, we see how price can bounce around in the quarters. So it hit this top quarter, came back up, completed it, and has already come down to more than 50% of it. There may be consolidation happening for today. There was no news today. Today's Monday. But yeah, so that's basically it. But we will have price at break even. But this is looking like price can still come down and take out the lows all over here, and then this here is fair value gap here. So the same thing that happened here can happen again on a larger scale. But anyway, but we see that this would have worked out for the 1 to 3. And again, I would have run it to break even by now, and I would have been hurt with it dropping so far back. Yeah, but the high is expected to, price. I'm expecting price to come up to, way up here. All right, later. All right, so I had finished it, but I said, oh wait a minute, let me look at it to compare it to my current model. Okay, so I almost sneezed. I had that pause. All right, so which is the pre-market, so 7 to 8 range. So let's say I didn't get in on this. Well, I mean, I actually didn't, but let's say I wasn't prepared to get in here with this move here at where it would have been 1 to 3 off of the structure here. Let's see how things would have played out. So remember, it's from 7 to 8. So this is 7. The lowest point is 7. The highest point here, and 8 occurs back in the range. We dropped the fib at 7:30 for the first presentation. Okay, so this is 7:30. Looking for the first presentation. The value gap appears to be here. So, and then I just like the color to be blue. So what I see is I see a low, high, higher low, and we know it did that middle one here. So low, high, lower low, then it ran up. But this structure here has this here. So I'm going to use a box. All these up close candles here. There we have it. Now, if I was to take this off, this got to be brown. It's not that. You're gonna see that the first quarter of this here, right? On the larger, low, high, lower low. This is a breaker. I understand. I see this high, low, higher low. So this is that, but price did go low without taking this out. This didn't become an official breaker until the high was taken. So it's a low, high, lower low. This is a higher time frame PDArray of a breaker, and we can come here. We can see here. Okay, I got that magnet off. That price stayed at that top quarter. There. See? This is beautiful algorithmic signatures in price. So this here, price ran really, really high and came down and created this here. It was 8 o'clock. 8 o'clock occurred over here, up there. We dropped over down. Here was the first presentation. We have a strike here. We break through and run into here. So now let's look at the time. So this first strike is 8:10. See that? So price opened at 8:10. This is, so the macro is completed. So yeah, I would have been like, oh, it's about to run now. It could run this way now, because 50 is right here. So looking at the time, you see here being 8:10. So this starts at 10 to 31, and where's 30? Bang, right there. See that? So what we have right now is we have 30 opening up. We have 30 opening up here, and this is on the time when price can run. So we have 30 opening up here, runs up, comes down, completes this, and creates this structure here, and now you can choose, yeah, if anything. Because it's 30 and the first 5 minutes happen here, yeah, this is like a final run here in the 5. 35 occurred. Then you can make a choice if you're gonna get in on like this being a low, a high. This is real tight and ugly. When price is gonna move fast, that's when you start seeing this here. A low, high, low, and then it runs. Starts to run. If you was gonna be sure, you would have gotten in on this one. Probably would have got a terrible fill here, and stop loss would have been back under here. But yeah, you have your own. You have to make your choices what you're gonna do. More so when price is doing this and it's around the time, and I'm seeing it hold at this here. A lot of times, I would chance getting in before price make the big break here. Plus I see low, high, lower low break. So this here, this low, high, lower low break, this here is an entry too, but I would have waited for 30 to happen. So this is just another pullback or time distortion till it got to 30 to then start to make its move. So with this being one already done, and then we see that the bottom quarter is being respected with the bodies here of this here, the down closes here. So this is a low, high, lower low, rise. These two here is an order block. and it's a good one too. It took out this low here, and there's actually another low here, valid swing low here. If we were to put a fib on this, we would see that the final quarter is being respected here, probably closing a little bit more, you know. But anyway, once price came back up, this here, low, high, low, low. Once this closed here, I would probably got it around here. But to tell you the truth, I gotta be honest. Because of the first presented this here, I would have probably waited. I probably would have waited here. So let me just do what I think. More than likely, I would have done. There's a lot telling me it's gonna go with this here, but I would have probably more than likely waited here. And depending on how this moved, I might have even just jumped right in. That I could say because of the rejection here. So I would have thought it was going to run fast. And I'm going to enter here. The stop loss would have been on the other side of this. And so that's 3. That's 4. So let's see if we would have gotten 12. 12. Got it. Alright. So I would have calculated this to be 4. And we got to 12. But we gotta have 12. Yeah. This would have been really tight. Cause I gotta include the spread, and on GJ it's often 2 and 3. Well, I don't know why it's showing different on here, but we can see it's 3.7 here, the spread 3.7, and here's 2. See this? You know, so I usually want to include an additional 2 to 3 for the commission and the spread. They get a commission and a spread. Well, you know, yeah. But we see 1 to 3, you know, was achieved there. Again, if getting in even on this one here, low, high, low, low, break, wait for price to come down into a again the time 8:30 open here, but yeah, 8:30. Yeah, so yeah, more than likely I could have even tried to get in on this one, and after it dropped down, oh, I can see if this is 8:30. Yeah, I can see I probably would have got in on the strike as soon as we hit it, or maybe even hit the middle of it. And under this one, the stop loss would have had to be below here. And it should be 1 click below. So that would have been 6. Yeah, this wouldn't have been a good. This wouldn't have been that was 6, 12, 18. This wouldn't have been successful. Because the entry would have been here, and by the time it got this, oh wait, the stop loss here, yeah. So the stop loss would have been brought to break even around 12, 2 to 1. This would have been a stop out. Look at how the bodies look. Look at that. So yeah, so if this is 6, then 18 would have been the 1 to 3. Then I would have had to have 1, no, 2 more in there. Hey, look how close it is. You know, so anyway, it would have been tight, but the more successful one would have been here, the entry over here, like an early entry on this. So in other words, just taking this to be X A, let me see, what is this? If this is 30 here, see that there, A30. So the first 5 would have been manipulate, well, would have been X. 35 is here, yeah. And then the next, yeah, no, I started running without it. So that could have been considered accumulation. I mean, it could have been. This looks like the S pattern. Yeah, this would have been accumulation and then manipulation. So 30 to 35 was accumulation, just expanded. And then 35 to 40 is manipulation. And then 40 to 45 is distribution. And continuation, and 50 starts. Yeah, so anyway, and then it goes sideways and everything. There's no news today. And I believe there's some bank holidays as well. Alright, well, that's it. So looking at it from the point of view of my model, it would not, you know, it made a move, and that's it, because now it's going into consolidation. But looking at it again, looking at it from the model, actually there would not have been any trade taken based on the high and low not taken. That's the main model. The high and low needs to be taken. So the high and low did not get taken, and that's that. But we do have the alternate, I remember, which is to you know, after the time there's a price come down into you know, price coming down into the last quarter, you know, which is, it's in this range and bouncing a bit. And if there's a PDArray there and it's inside the area, you know, we can take a trade. But it's really wanting to make it plain and simple and straight up, and that would be waiting for price to take the high and low of the range. And you only have up until 9 o'clock to make an entry. And 9 o'clock is here. So this here, so the next range would have been 9:30 to 10. So let's just mark that up real quick. Okay, here goes 9:30. This is the lowest. Oops, put this back on. This is the lowest point here. Okay, so the lowest point at 9:30 is here, highest is here, and then we draw out the first presentation. Let's see, this is 9:30, the first presentation is right. First presentation value, that was there. Chart. Just extend it out. And for these, we put the date 6. Okay. There we go. We see how price works around these areas. What time? Alright, so let's just analyze this now. So we have 10 o'clock occurs here, and let's see, price does a shallow run underneath the 730 here. So I'm learning to be patient and not take trades like that and wait for at least 125. So it takes out the high here. There's a market structure shift. Does hit this here at the 25, and this would be a counter trend trade because I'm expecting higher prices overall. So high, low, higher, high. Looking at the time, not a good time. 50. We go all the way down here. Ran the highs, and then more than likely I would have got in. I would have waited for the price to come back up into a premium, and from here to here, that's this one here to here, 50%. From here, this fair value got here. Price comes up. I would have noticed this here as a quarter of some higher time frame, PDArray. But more than likely I would have got in around here. On the 15-second, stop loss would have been like here or higher. Yeah, because this bearish order block, which is not a good one. I mean, this here is this one here, because this one took out the high here. So this order block here is the one that would have been, this is encompassed in it. It peaks out, but the bodies are inside. So I would have had to respect this one. So if I would have done that, let's draw it up. Entry around here would have brought about a stop loss above the high. And we can see here that this here would not have been a good trade. The lowest point it got to is right there, 11. Yeah. And by the time it got down to here, it would have been brought to break even. This would have been like a day of just chop and being taken out at break even. Once it got to here, it would have been brought to break even. So we didn't even get a 2-to-1 yet with this move here. Alright, so that's it, but that's how it would have been worked out. Yeah, high, low, higher, high. Entry would have been here. Yeah, so look at how price respected the mean threshold of the order block. It peeked through, but the body's closed. And I'm going off of this one here. The middle is about here. And we can see how price stayed below it. So algorithmically, it's paying attention. Alright, later.